Good evening, everyone. Welcome to the webinar, Technical Trading the SiMSCI. I'm Ming Hui from Phillip Futures, and speaking to us today will be Mr. Tom Yuen, SGX Academy trainer and professional trader with over 30 years of experience in the industry. He'll be sharing with us the market structure, how it behaves, and stay tuned for the main topic, how you can use technical analysis to trade the index. Before I hand this over to Tom, I'd like to inform everyone that if you have any questions throughout the course of this webinar, please feel free to drop them into the questions box because we will have a Q&A session towards the end. And now, without further ado, I will pass this over to Tom.
All right, good evening. I hope that all of you can hear me loud and clear. Okay.
Yep.
Nice to know that we have audiences from all over the place. I have been doing seminars in Malaysia and Thailand. I will talk more about this later on. And this is the first time that I'm having all these countries together all at once because of this pandemic situation. All right, so without delaying too much, I will jump straight into our presentation, and I hope everybody, or rather most people, would be on time. This session, technical trading the SiMSCI, right? By the end of this session, or rather halfway through, you would already have a very good idea of what I mean by technical trading the SiMSCI. Now, I'm calling this, I'm giving a nickname to this session. I call it the SiMSCI Hour with YCK Tom Yuen, and that is me. I will continue to introduce myself a little bit more. This is where I come from. Whether you can recognize it or not, this is the floor trading. This is the open outcry pit where people wear red jacket and shout and shout and shout. So this is my background. And in the floor, there are different kind of occupation. There would be officials, there will be employees, there will be floor manager, broking houses, but I belong to the group called traders, or rather called locals, which means that we are there to trade our own account, all right? No basic pay, no customers, no commission. So if we make money, that is our income. If you lose money, we lose money, yeah? So that is what I do since 1992. All right, the proof that it has been that long, not that I need to prove to you though, is that you can see that this fella is standing next to me. All right, if you cannot remember, if you're too young, you cannot recognize who he is. This fella by the name of Nick Leeson, who single-handedly brought down bearings in 1995. So the timeline goes like this. I joined the floor in 92, and he came in 93. And then in 94, this program is made by Money Mai featuring me. He squeezed on next to me and get caught there. And then in 1995, he became famous. All right. So basically, that is just to show you my background, where I come from. All right. I want to highlight the purpose of this particular webinar. Yeah, it is not a one-off webinar, but it's going to be a series of monthly webinar with one main focus. The main focus is stated here: to get you started trading SiMSCI ASAP. Okay. Now, whether you already know SiMSCI, whether you are already trading futures, I would be trying to share with you some of the necessary startup pointers. Yeah. Although only 1 hour, some of you might be able to pick up some important pointers, and straight away after today, you somehow get yourself started. Some people might take longer, but let's see how the thing goes. So the approach is going to be rather candid. There's no like fixed format kind of thing. I'll be doing a candid sharing with a lot of storytelling. Yeah, so stories from all over the place relating to trading. So if you like to hear story, very good. If you don't like, maybe try me. Yeah, I think I'm a very good storyteller. All right, the pointers here. Do take note that I'm not a Wikipedia, which means that I'm not here to answer you everything you need to know about the financial market, because I am not a know-all person, and I'm not God. So I'm not going to make any forecast, any market call. I would typically be sharing with you how I make money, yeah, how I've been making money over the last 30 years, my way of doing so. So I want you to tune into understanding my way of doing so and see how you can benefit from tapping onto the way I think, right? Instead of trying to come with your own agenda, what you want to know, yeah, at the end of the day, hey, Tom, what do you think gold is doing? What do you think, what are you doing? I would answer that kind of question, all right? So let me repeat. it's going to be a series of monthly webinar, which means that after today, next month, I'll be doing another session. Then we take it 1 month at a time. Yeah, if things are okay, we might do this all the way until the end of the year, which means that we have about 5 months. All right. So and that would be to prepare you and to help to continue to prepare you to trade SiMSCI. Okay, so let me go on to the next slide to again make sure that you understand the different entities very well. Now, for those of you who are in Singapore, whether you realize or not, once upon a time, right, we have two entities called SES, the Stock Exchange of Singapore, and the other place called SIMEX. SIMEX, where I work as a floor trader. Yeah. So SEX is to trade stocks. This one is to trade futures, open outcry. Some time ago, they merged these two things into one single entity called SGX, which is what you are facing now. But within SGX, there are still two separate departments called the ST department, stands for securities trading, and the other one called DT department stands for derivatives trading. All right. So basically, ST department has taken over what SES used to do, but now doing it in an electronic way. Whereas DT take over what the open outcry used to do, but now do it in an electronic manner. Yeah. All right. So this is you. This is you, right? When you wish to trade the products of SGX, you are not able to go direct into the exchange server. You have to go through a broker whereby you open an account. So there will be two kinds of account. If you wish to trade shares, yeah, you need to open account with a broker with the ST license, right? So that you can trade the SGX shares. Whereas if you wish to trade futures, you need to open an account with a broker with a DT license, yeah. Some brokers only have ST license, some brokers only have DT license, while some brokers have both license. Philip, for example, they have both license. So you open an account with Philip, you're able to access to the ST product as well as the DT product. All right. So now the fourth party, me, yeah. I have been doing a seminar for SGX for more than 10 years. I realized why I need to do this particular slide, because many people, not many people, some people, for whatever reason, they have some complaints about the exchange. All right. When I'm doing the webinar, they look at me. Yeah. So Tom, no, you exchange. I have to tell them, no. I don't belong to the exchange. Or some people, they want to complain about the broking house for whatever reason. Yeah, oh, you Philip, you know, no, I'm not a Philip. So this slide, let me summarize. I am not from the exchange. I am not from the broking house. I am just like you. I am trying to make money. Yeah, I'm trying to make money by opening an account with the broker to access to trade the exchange. All right. So in a way, I happen to also be a customer of Philip. Yeah. So therefore, I'm glad also to be doing this for them. All right. So next slide is basically who connected us together. Actually, SGX is the one, right? They brought us here because they can tell you about good products, they can tell you about good service, and they want me to share with you how I have been making money all these whiles, yeah, so that to see if you are able to benefit some of my pointers. Okay. Now, so this slide, what are our common goals? Common goal meaning what? What is the whole purpose of everybody doing whatever we are doing? Is the answer obvious? One simple answer: to make money. All right. So I want to also share this because some people are simply not very fair. They only think of themselves making money. They forget that the broking house are doing a business to make money. So they charge you commission by offering you service. Yeah. This fella come up with all these products. They also want to make money. All right. So they charge you clearing fee. Now, for me, I'm already making money as a trader, but for me to spend time to share with you what I do, sharing my secrets, I make money in case some of you want further service from me by attending my course. Okay, so let's hope that we will make this a total synergy of win-win situation for everybody. Yeah, that you are able to make money trading all these products, and then, well, let's see how it goes. Okay, so now let's talk about you. Yeah, you. For you to make money, all right, this is how I would be sharing with my audience, especially the relatively new ones. I use this analogy, which I think is very good. Yeah, is equivalent to you wanting to make music. You want to enjoy music by making music. Now, what is the criteria for you to be able to make music? There are two things that you need. Number one, you of course need to understand music theory. In fact, very good at it, right? If not, you will not be able to create music. Yeah. And number two, you of course need good musical instrument. All right. So what are the different kind of instruments that will make what kind of good music, and what are you good at? Are you good at fingers, playing string instrument, percussion, or are you good at wind instrument because your lungs are big, right? So you will need these two to make good music. Now, so with this analogy, if you wish to make money in the financial market, in the same token, you will need to have good theory of how the market behave. Yeah, I call this market behavior. I call this behavioral finance. So you once you understand how the market behave, then it's not very difficult to actually solve the code of the market. All right. Now at the same time, you also need good trading instruments, because different instruments are made for you to express your view of the market in different ways. So of course there are plenty of instruments, and people who do not bother to take the time to find out, they simply get confused with all the different instruments. And as a trainer, I'm always asked, yeah, about what's the difference between this and that and this and that and this and that. Okay, anyway, today I'll be zooming into one particular instrument called futures. Yeah, futures. I will try as best as possible to let you understand as much as possible the conceptual understanding, so that you can start doing it ASAP. Okay, so only when you are good at this and this, then you're able to effectively make music, yeah, or make money. Okay, so I want you to remember this slide, because this model, I'll be at different time talking about trading instrument. At different time, I'll be sharing with you market behavior. At the same time, I also want you to remember this. All right, this is another important thing that I have been teaching people. I borrowed this concept from the book called Trading for a Living by Dr. Alexander Elder. He calls it the 3Ms. A lot of people feel that what you need is a good method. Yeah, you get trained or taught by someone or attend a course that teach you a method that is like, oh, 98% accurate, 9 out of 10 trades winning. So they zoom into that. But a good trader, a good book, a good course would be sharing with you that while you need a good method, actually there are two other areas that is equally important, if not more important. The other area is called money management. All right, you are using money to trade, you are risking money to trade, so therefore you need to manage your risk properly. So that will be either under money management, or we call it risk management. Of course, this portion, yeah, would be called the trading psychology. You call it mindset, you call it discipline. To me, as far as I'm concerned, this is the most important area, because this is the area that's going to effectively help you utilize the method. It is going to be the portion that would do the controlling of the money, all right, and the risk. So therefore, again, remember this model as well as this model, because in separate slides, I'll be highlighting maybe on the mind, on the method, or maybe on the money management itself. Yeah, so do me a favor by remembering these two particular formats. Okay, so before I go on, as an SGX trainer, I would always need to show this thing called disclaimer. I hope you understand what this is all about. I will make you read them, but to summarize in 2 words for you, the exchange would want you to be very aware that you might be getting yourself into something that is considered high risk. Yeah, usually this 2 words is very scary. People look at it, wow, high risk. But let me complement it with my 2 words called high returns. So in a very, very simple, commonsensical way, yeah, when you become good, you will be looking at high return. When you are no good and you are careless and you simply do all the wrong thing, then you look at high risk. All right. Anyway, as far as I'm concerned, you need high returns. There will always be 2 sides of the coin. Yeah, there will be no such thing as, oh, no risk, zero risk, and you want to make a lot of money. I don't think such thing will happen. Okay, anyway, let me start by talking about the mind first, because I think this is the most important. So actually, for most of my seminars, webinars, and classroom training is effectively training the mind. So when you have a winner's mindset, you would end up with a winner, as a winner. Yeah, this is something that most people fail to understand. They think that they would make money, then they become a winner, without understanding, first of all, if you are developed to have a winner mindset, you will end up to be a winner, not the other way around. Okay, so how would I want to talk about this thing? Yeah, I think the best way for me to share, because today I am 30 years of trading experience. For you to understand how I'm thinking today would be a little bit difficult, right? You will not be there. So why not I bring myself all the way back to when I was totally new. Now, although with due respect, Not all of you are totally new. Some of you might even be trading 10, 20, 30 years or even longer than me. For whatever reason, you're listening to my webinar, right? But I want to assume that most of you are relatively new, especially some of you who are not new, but you're not making money, yeah? I'm trying to tell you, when you're not making money, it has got a lot to do with here. So I'm going to bring myself back to 30 years ago, right, when I was new. So I'm going to tell you this story. But what is important is not just for you to listen to the story and relax. I want you to try to follow my way of thinking, all right? How eventually I end up to become a winner, okay? Can you do that? So what is my story? Now, it goes all the way back to 1986. That is the year I graduated. So very telling idea, that would in a way expose my age, whether you're older or I'm older. All right, I am a computer science graduate from NUS, okay, local university, comp science grad. So what am I telling you about this? Meaning that I've got no background training in the financial market, all right? No econs, nothing at all. So it would be a good news if you have got no background training, which is to say that you can be equally successful without any of this background training, all right? So after graduating, my first job, is in DSO, Defense Science Organization. They employed me to become a defense scientist, so to speak, and I was sent to Sweden to work for 3 years, 86 to 89. That 3 years changed my life. Okay, now how did it change my life? I will continue to share with you the story. All right, when I go to Sweden, the government, DSO at the point in time belongs to the government. They would pay me an allowance, to work overseas. So of course, after the initial month of paying me 20,000 Sing, followed by the second, third month 10,000 Sing, subsequently, once you settle down, they will pay me 5,000 Sing dollar a month allowance. All right, this is not today's price. Today is already 2020. You got to move yourself back to 1986. During that time, right, 5,000. This is 3 times my monthly pay as a fresh grad. All right. So now the other thing is that they pay me 5,000 Sing dollar, but they will convert into Swedish krona for me before they send over to me. Yeah. All right. So I'm trying to recollect what are the rates, and I call up the Swedish krona chart, which is SEK. I don't have data that goes all the way back to 1980 something. So this is only from 1998 all the way till now. But anyhow, I want you to take a look at this. Take note of this few portion. This few portion whereby over 1, 2, 3 years, how the Singapore dollar is appreciating against the Swedish krona, right? How it appreciates against the kronos in this manner. Incidentally, in 1986 to 1989, we are in the same situation, which means what? Well, I'm just going to use this example. For example, this is the period that I was in Sweden for that 3 years, right? For the 3 years. So what happened? The exchange rate is 1:4. 1:4, meaning 1 Sing dollar, I can exchange 4 kronos. So for 5,000 Sing dollar allowance, I would have been converted into 20,000 kronos to send to me. All right. So every month I receive 20,000 kronos. And then what happened? Slowly, the next month and the next month and the next month, I actually receive more and more and more. All right. Up to the point whereby I'm receiving 5 times. From 20,000 kronos, I received 25,000 kronos. Now, happy or not happy? Now, obviously, that is the reaction, I was happy, and in fact, all the team were happy until 3 years later. Time to come back to Singapore, all right? Come back to Singapore. So what do? We have savings, So we bring our savings, go to the bank, and we convert back from Swedish krona back to Sing dollar. Now the rate is about here. Can you see what happened? Which means that now we want to convert back to Sing dollar, it suddenly shrink. We got a lot less Sing dollar. So most of the Singaporeans in the bank, they are not happy and they're complaining, right? They're complaining, except me. I did not complain. I always consider myself, that is my moment of enlightenment, right? I'll explain what I mean by enlightenment later on. So what did I do? I refused to convert and I brought the Swedish kronos back home, right? To monitor the rates, to see whether it can go back into my favor so they can change it with more Sing dollar. So that is what I did. Now, after coming back, since my savings would have been an equivalent of more than 50,000 Sing dollar, right? So I go to the Swedish bank. I look for the National Swedish Bank in Singapore, and I walk in with this amount of money. So, ladies and gentlemen, what I want to share with you can also be important, because if you go to the bank to invest in foreign currency, right? Over the counter, the board rate is never good. the quote you get is never good, and the interest you get would never be good. But if your amount is big enough, a special banker will attend to you, and you're going to get a quote that is a lot better, and you get an interest rate that is much better than what is given at the counter. I think there's something that you already know, huh? So what I'm trying to say is that don't go to the normal counter because it's not going to be favorable for you. All right. So anyhow, I get very good service. Yeah, this seller tried to help me monitor the rates. At the same time, she's trying to tell me, if you're interested in Scandinavian currency, there are a lot more pairs you can watch. Yeah, Danish kroner, Norwegian kroner, and soon I started to watch a lot more currency pair, and that lead me to into a foreign bucket shop, a forex bucket shop. All right, what is the bucket shop? Most of the young people now, you have not heard of this, but the older ones you have heard of. Is simply those fly-by-night financial company in the 80s, yeah, that is non-regulated, that entice people to go and trade because they know most of the people will be losing money, right? So I attended one of these forex bucket shop seminar. So actually what they show us is, now this example of a GPP, of a pound chart. So they're showing you this period. Look at it. This is from 2 o'clock until from 02 to 22, within 24 hours, right? Within 24 hours, this magnitude of movement, yeah, from this big figure to this big figure is $1,000, 1,000 US dollar in value. All right. So within 24 hours, you can have movement based on one contract. You can gain $1,000. You can also, if you get the direction right, you can sell it down. You can get $1,000. So basically, now to those of you who are experienced, this is to you already. It's common sense to you. But imagine someone new, all right, trying to monitor foreign exchange rate with a sum of kronos, or for any investor that you're holding the position for 1 year, and you realize that, oh my goodness, I'm trying to make 10% return per annum, 20% per annum. But you realize that when you go into trading, there are a lot of things that are available that allow you to, within 24 hours, there are such movement that you can benefit from. All right. So what happened to me? Yeah, I started trading. I started to open an account without training, just because of just due to that briefing, as well as my own experience monitoring a foreign currency exchange rate. I started trading. Within 2 months, what happened? I made money. I made more than my 2 months pay. Yeah, of course. Again, this is how I look, right? Do you see that there is a but here? This but means that, well, I have one bad trade and I spit it all out in 48 hours. I give back everything and then lose some more. I basically lose 3 to 4 months of pay within 48 hours. Yeah. All right. Until this point, my story goes like this. I don't know what and how your reaction is. Some of you might think, oh, yeah, that happens to me before. Some people might say, oh, tamsin lah, greedy lah. Some of you now waiting for my answer. Okay. Now, I don't know your conclusion, but let me share with you my conclusion. Take note, this is what I call a winner's mindset. I have 4 points I'm going to share with you. Number 1, I concluded that whatever it is, yeah, trading is just a number game. You can throw me any chart, or I can throw you any chart. You don't have to look at what the product is. It can be stock, it can be forex, it can be oil, it can be Bitcoin, it can be gold, it can be anything. And any time in time, intraday, there will be such movement. If you get the direction right, you will make money. People call you a winner. You get the direction wrong, you will lose money. Yeah, people call you a loser. I would like to call these people contributor. Okay, so basically it's just a number game. And number 2, because of my experience of the Swedish krona, I realized that we are all affected by the markets, like it or not. Whether you are participating or not participating, due to all the movement, you will be affected by the market. Do you agree with me? All right. It doesn't matter due to subprime crisis or due to a financial crisis that people get hurt. Do you know that if the market is very bullish and people are not participating, you can also get hurt? Because when the market is very bullish, the whole world go into a crazy bull run. That will basically push up everything else, including property prices, including COE, yeah, car prices. So people who are not participating, and when all these are being pushed up, you will suffer. You will find that suddenly you cannot afford a lot of things. So this is what I mean by I start to realize, yeah, from my Swedish krona experience, that we are all affected by the market, whether we like it or not. So therefore, my conclusion is I need to get involved. I need to understand the market itself. And I don't have financial background. And I've seen in the forex market shop that there are people who are making money. They can be even non-educated. So you really do not need financial background, right? So there is something else that is important, which I do not exactly know what. So I feel that I need to shortcut my learning curve by learning from the winners. Okay, now, ladies and gentlemen, you listen to something very important. Do not listen to someone and tell you, oh, future is very dangerous. Oh, this is very dangerous. That's very dangerous. Ask them why. Oh, because they lose money. No point listening to a loser, because a loser is going to tell you a losing mindset. So therefore, what did I do? I want to look for a winner. Where to look for a winner? I can only read books, attend courses, yeah. And after reading books, I read about futures. The whole futures model has got a open outcry. I realized that this is the place I need to go, because this is where you can find a lot of winners, lots of them. Yeah. And fortunately, in Singapore, we have our own open outcry, right? And every now and then you will see in the papers how much locals can make $36 million over a third quarter. And every now and then they will publish advertisement to invite enterprising individuals to join the floor. Now, I responded to one of these advertisements, but do take note, again, I'm talking about mindset. Business opportunities for enterprising individuals. I want to highlight this word called enterprising individuals. It's not meant for normal people, right? Not that it's not normal. Anybody can be enterprising. It's again all about mind. Enterprising means basically business. It means risk taking. It means that people going to do business understand that there's business risk involved, and I need to exchange risk for return. I need to understand the risk. I need to manage the risk. All right. So Warren Buffett says risk comes from not knowing what you are doing. So therefore, why am I showing you this? Ladies and gentlemen, I do training for SGX for more than 10 years. People come to attend my seminar, come to attend my preview before they sign up for the course. Yeah, they're very impressed by my presentation and my performance. So they want to sign up for my course and they tell me this, Tom, I'm not a risk taker, you know. Yeah, I tell them, then you don't have to come. You need to be a risk taker. You just need to manage them. All right. So one more thing, yeah, you need to quit your job to join the floor. To join the floor. Okay. So that also explains why a lot of people do not want to join, because they dare not quit their job. Yeah. I felt so happy. I quickly go back, tender resignation, and I jump into the pit. So, ladies and gentlemen, can you see the mindset of all these people in the floor, all these locals? They're all entrepreneurs. They're all with the right mindset. They come in to manage the risk, to exchange for good money. So therefore, jumping into this environment, yeah, what is my outcome? I still struggle for 5 months, right? Despite the good environment, I struggled for 5 months. Fortunately, at the end of 5 months, I started to turn around and I started to make money. Yeah, I recovered my losses and I started to make money. By today, it has been 30 years. Okay. Now, I am someone who is very passionate about what I believe. So I believe in this and I started to do public education. Yeah, from 93 to 97 until my daughter is born. I got so busy, I stopped doing public education. I have been sharing with people, if you want to really make money in the financial market, you must understand this and you must do like me. Quit your job and join the floor. Go to the floor. Honestly, I did this for 4 years. How many people did that? Most of them don't, because most people find, wow, so risky. Now, so far, ladies and gentlemen, I have been sharing with you. Do you follow what I'm trying to tell you? Mindset, yeah, mindset. All right, I attribute my success to the trading community, because it's a wonderful place where you can learn a lot of things. You learn about multiple styles of trading. So many ways also can make money, provided your mindset is correct. You learn from other people to shortcut your learning curve, yeah, so that 你不会走冤枉路. All right, so today, yeah, people want to go to the floor. Too bad. 2005, the floor closed. And by 2006, yeah, the final pit also closed. Goodbye to the buzz and drama of open outcry. So this wonderful place, as of today, it has transformed and it looks like this. So what is this? This is a futures account by Philip. All right. So each of this box represents a pit. So in the floor, every pit will have one product. Yeah. So the advantage of the floor transition to electronic is now you can actually trade a lot of things. You can access to a lot of PIT, and not only SGX, you can also access to all the exchange in the whole world, all at your fingertip, all with your computer. Yeah, and of course, so with that, you can be free and you can live and work anywhere in the world. You can be independent from routine and not answer to anybody. And this is the life of a successful trader. Ladies and gentlemen, I did not say this. All this come from this book called Trading for a Living by Dr. Alexander Elder. He started his book with these few lines. Yeah, I read this book in 2002, 10 years after I become a trader. And I read with delight because this is the way I live. All right. Essentially, can you relate to this now? Because you are very familiar with something called WFH, which stands for work from home. Because of the pandemic today, you are forced into a situation that happened to me over the last 20 to 30 years. Yeah. Now, what is happening to you has happened to me in every way. So I think because of the pandemic, that suddenly your job is threatened. Suddenly you need more money. Suddenly you might be affected financially. All right. So you want to take a look at how else you can make money. Yeah. Now you are forced to work from home. So basically, pandemic has changed our lives. You're going into technology for better or for worse. That has brought you to listen to this particular webinar. All right. So what is another difference between that time and now? You do not have to quit your job. All right. During my time to join the floor, I had to quit the job. But now you can still work, yeah, whatever job you have. At the same time, you can attempt trading. So that is the wonderful thing. All right, go back to my story in 2008. SGX, because of the floor closed, no more floor for people to learn from. So they wanted someone to help them do training, all right? And my name is being mentioned for one very simple reason, because in the floor for 14 years, I am someone who is very free to share whatever I share with all passion. So they know that if they want someone to teach, they approach me. If I say yes, I would deliver. So therefore, they asked me to develop a program, and then they issue a certificate to certify me to my personal name as their certified professional trainer. So I have since been doing a lot of things for them, including going to Malaysia, to Johor, KL, Ipoh, Penang, to Malacca, Subang, Kuching, Cebu, to Terengganu, to Kuantan, places which I would never have thought of visiting, yeah, unless you want to go and see turtle lay eggs. All right, so for all my Malaysian audience today, I really miss you, because the Malaysian audience, they really, I find that they really treasure foreign trainers, they are Singaporean trainers. I don't know about today, but at a point in time, they say that they don't have too much local trainers in their country. So they are really very passionate about learning, yeah, to our Malaysian audience. I also go to Thailand to give seminar, to give talk, to share with their prop teams. So when I look at the audience today, yeah, with all these people, actually, I feel very nostalgic, right? But back in our own Singapore, I developed a 2+3 days course for our own Singaporeans, leading to a community trading. Yeah, I formed our own small little trading community because I think that is important, right? I developed my course based on this belief. Yeah, so it's not you don't want to learn from one person, you want to learn from more than one good trader. Also want to learn from your fellow students, fellow classmates. I think that is important. Okay, so half an hour has gone. So some of you enjoy my story. Some of you might thinking, hey, Tom, technical trading, the SiMSCI, what is happening? I did not forget that. I have so far, the purpose is to get you started as soon as possible, right? With the most important thing about the mind, yeah? I must prime you to have the winner's mindset. Then only it will make sense for you to do whatever you want to do, be it SiMSCI or anything else, yeah? So I spent half an hour sharing with you my story for two purposes, so that you will know more about me. At the same time, I want you to correct whatever mindset that you have that is wrong, yeah, that is wrong. Too much different from my thinking, by definition, would be a little bit wrong, huh? Okay, so I'll be ego. All right, so again, SiMSCI, yeah, SiMSCI. Now, this year, Singapore turned 55 years old. 5 years ago, Singapore turned 50 years old, SG50, all right? 5 years ago, they also did another promotion now for SiMSCI, such that for the small volume trader, there are 100 gold-plated medallion to be won. And for the high volume traders, there are 10 solid gold medallions to be won, all right? So 5 years ago, I am one of the 10 winners of this, of this, yeah, presented to me by the SiMSCI manager in the SGX trading room. All right, what I'm trying to tell you is, ladies and gentlemen, I'm telling you about SiMSCI trading. I myself is a full-time high-volume SiMSCI trader even until today, yeah. So I'm not telling you about theory only. I'm actually doing it myself. So trust my sharing with you. All right, now I'm going into the more technical part of this sharing itself. All right, this is not what I do. This is what I do. Yeah, I trade index futures with technical analysis. Now, why am I showing you this? Because most people trade shares. They have experience with shares and they invest in stocks with FA. So for me to actually make them understand more, I would usually explain by contrasting these two. Yeah. So first of all, let's talk about investing and trading. Two main differences. Investing is long-term, trading is short-term. You already know. Within one day, there are a lot of movement that you can get in, get out, get in, get out, right? So that is how short is. Number two is investing is basically one direction. Most people want the market to go up, they don't want the market to go down, yeah? But trading, you can benefit from both directions. So the terminology is, this same chart which I showed you earlier, within 24 hours with this kind of movement, all right, if you feel that the market is going up, your first action is to buy. If you're correct about the direction, yeah, at a higher level, your second action is to sell. This is called going long. So you will benefit from a bull market by going long, right? At the same time, you can also benefit from a bear market if you read the direction correctly. If you feel the market is going to be weak and go down, your first action, number one, is to sell. If the market actually go down lower at a lower point, your second action is to buy back. This is called going short. So get used to this term if you're not aware of. Long and short also you can make money. Yeah, of course you must be right. If you're wrong about the direction, long short also you lose money. So for traders like myself or all the traders, to us, no such thing as up market means good, down market means bad. Up and down also good if you get the direction correct. If you get the direction wrong, up and down also bad. All right. So come back to this. Yeah, I wonder if when you listen to my story just now, do you remember I said that I still struggle within the first 5 months? After that, I turned around, right? So what exactly happened to me within that 5 months? I learned from the seniors. I talked to everyone who is willing to talk to a newbie. So at the end of the day, I summarized into two important golden rules. Yeah, I call them golden rules for a good reason. Please remember them. I'm going to share with you now. Now, these two golden rules are, most of them would be teaching a newbie to follow order flow, right? Now, order flow in simple word means trend. So the first rule is you have to identify the trend and preferably follow and trade in the direction of the trend, unless at the end when it bends, okay? So this is golden rule number one. Now, number two, this is a probability game, so you can be wrong. If wrong, you must cut loss. This is the most important rule of all. Please take it down, all right? So number one, identify, follow trend. Number two, if wrong, cut. If you follow these two rules, you can never go that wrong, and eventually you will be able to make money. All right, so just to make you remember that that first important rule, I quote this fella, yeah, who says that don't trade on the basis of tape. In other words, trade with the trend, but not your friend, because your friend might sabo you. So trade with the trend. Okay. So now after the first part whereby you are doing shorter term in both direction, next thing is most people trade stocks. Yeah. I also attended stocks lesson when I was new in 1990 when I came back from Sweden. I find that I'm no good at it. I'm not saying stocks are no good, just that I'm no good. The main difference is it's all micro versus macro. You need to read financial statement, zoom into what's happening to the company. Yeah, you can select the wrong stock. This stock can go to zero if you select the really wrong company. There's something wrong with it. So I chose the easy way out. I do the index, right? So basically, index is a macro. Index is a basket of all the blue chip stocks that represent the country. So therefore, you have Hang Seng, you have Dow Jones, you have STI, and so on and so forth. Yeah. Now, so what about this? So the basket of index, right? You will realize that this is something that happened recently. We have two Singapore index, one called the STI, one called the SiMSCI. Yeah. The MSCI, four stocks, because they are so bad, they have been dropped by SiMSCI. This is just about 3 months ago only. On the 28th of May, the news came out. Yeah. So they drop it. And only one stock, Mapletree Logistics, will be added, and while the other four are dropped. My goodness, we don't have good enough stocks to go into the index. Yeah, but anyhow, following that, on the 8th of June, SPH also dropped from STI, all right? So which make STI and SiMSCI a little bit more aligned. Now, I won't have too much time to elaborate too much on this, but the main point I want to tell you is, if you deal with the index, yeah, you don't have to care about individual stock performance, because once they're no good, the community, basically this group, they will drop it. They will always put things that are good and proper in this basket for you. You get the point? So because of that, it is really in the macro picture. You don't have to bother about the micro analysis of individual stock, yeah? So unless you are good and that is what you want. Okay, index is just a number. So therefore you need a derivatives to trade the index, which is why futures comes in, okay? Now, so futures has got all these different asset classes, and my forte is to do the stock index, yeah? Why is the stock index better than the rest, from my opinion? Maybe in another session in subsequent month, I will come back to explain this a little bit more. So these are the products that we see from the floor, okay? We have oil futures, we have interest rate futures, but basically we have a lot of indices to choose from. Tonight, I'm going to share with you these two things called STI futures and SiMSCI futures. Now, I'm sure you all do not know that there's a STI futures, yeah? Of course, you all don't know because it died a miserable death. So today, no one traded this. It has been dormant for more than 10 years already. So if you want to trade futures of Singapore index, you can only look at this thing called SiMSCI, yeah? Now, so at this point in time, I'm going to zoom into talking about trading instrument, the STI index versus the SiMSCI index, as well as SiMSCI futures. Okay, so this chart I placed side by side. This is the STI index chart. This is the SiMSCI futures chart. Yeah. So you can see that they move in tandem. They have a correlation of at least 97%. Okay. Now, so I'm going to show you a few years chart from 2017 until today. Yeah. 2017 is a bull market. Whether you remember what happened or not, Donald Trump got elected at the end of 2016, and then the market will go into a bull run. 2017, STI rose about 20% for one whole year. SiMSCI rose about 23.2%, okay, for that year. All right, I'm going to explain a bit more on this particular instrument. Value-wise, yeah. If you look at SiMSCI, what is the value? Now, you look at the number here, is 320.00. If you simply ignore the decimal point, that is the value of SiMSCI, which means that at the end of 2016, it closed around here with a value of 32,000 Sing dollar. So during this year, it rose there, right, to a high of about 39,000, yeah, giving you a return of about 23%, okay, for the entire year. All right, if you wish to trade futures, you do not have to put up this amount, $32,000. Futures would be traded only with margin, yeah. During 2017, you require a margin of only $1,000. This margin will fluctuate. As of today, trading SiMSCI, you need a margin of more than 1,000, but less than 2,000. All right. So with a $1,000 margin in your futures account, you're able to purchase one contract. Yeah. So I'm going to show you some numbers to illustrate the point, which means that if you buy 3 contracts, 3 times 32 would be 96. Yeah, we round out to about $100,000. You require only 3,000. Can you see the amount of leverage? This is more than 30 times leverage. With $3,000, you're able to gain exposure to the market of almost 100,000. So which means that if the market were to rose 20%, 100,000, 20%, you would have gained about 20K, correct? Approximately 20K. But how much is your exposure? You only use $3,000 to make $20,000. We are talking about a percentage return of more than 600%. So that is the power of futures, and that is the wonder of this instrument called futures, right? That I'm trying to explain to you. Okay, what happened? In the next year, yeah, the market actually dropped. So therefore, if people just listen to one side and don't understand the market can go both ways, they use a margin of about $3,000, buy the same thing, the second year would have dropped this amount. So if you get in the wrong direction, you can lose beyond your margin, right? You can lose more than what you can afford to lose. And this is why the authority needs to give a disclaimer to make you understand this particular point. Now, the next year, 2019, was a sideways market for Singapore. So it went up, down, up, down, down. At the end of the year, no big deal, all right? And this would be what happened to this year's market. So you can see STI from last year's close, yeah, due to the pandemic, it dropped about 31%, and as of today, it is about here, right? SiMSCI approximately the same. So this I basically have in a way make you understand the contract value, yeah, the full value of SiMSCI. Just look at all these numbers, which means that at the end of last year, it is in the region of about $37,000. The crash caused it to go down to a low of left only about 25,000. As of today, it is back to around this level. So the whole worth of SiMSCI is about $30,000 if you were to purchase or sell one contract of SiMSCI. Okay, but today the margin is in the region of $1,007. $1,700 you can trade one contract of SiMSCI. All right, so I have in a way briefly explained the futures feature and SiMSCI to you. Now let's take a look at this. Yeah, stock indices. So I trade, yeah, stock index, macro picture using futures with technical analysis. Very quickly, what are the difference between these two? Fundamental and technical. And what's the advantage of TA? You don't need to follow news. Although I know people like news, yeah. You don't need financial background and you don't need to learn how to interpret news. All right. You only need to understand market behavior, the market theory, music theory, and one thing good about TA is it gives you timing that fundamental cannot give. For the remaining time, all the charts that they show you would prove to you this point that timing is very important, whether you agree or not. All right, I have students who show me this. They receive email, they see this from the social media. They say that currently, teacher, the economy is very bad, right? But the stock market is very rosy. It's detached from reality. This is not real. I told him, if you see any more email that tell you that the stock market is not real, do not read anymore, delete those mails. To me, as a trader from the floor, what is real? If you buy and the market go up and you make money, that is real. If you think the economy is bad and you sell and the market go up and you lose money, that is real. Are you getting my point? So we are not going to interpret the economy because you can interpret wrongly. All right, so now I'm going to talk about this portion, yeah? As a professional trader, how must you understand market behavior in order to benefit together with using instrument and make good music and make good money? All right, people ask me, over the last few months from the pandemic, yeah, whenever I'm doing seminar, webinar, Tom, are we having bull market or bear market? I ask you another question back. Which market are you referring to? Okay, so now let's go on into method. All right, just now I talked about the two golden rules. Do you still remember? First golden rule is to identify trend. Yeah, next one is wrong cut. How to identify trend? I'm going to teach you. Very, very simply, in the bigger picture, yeah, something that you can go back and practice and apply this. There are two ways for you to identify trend put together. I'm going to talk about the second one first. When the market trade above or below a 200 EMA on a daily chart. All right. Now this is a daily chart. Let's learn from history. I'm going to go a bit slow, although my time is running very fast, but I want you to capture this part properly. Those of you who are still with me, listen to this carefully. Listen to this carefully. In 2007, it's a bull market when it stayed above 200 EMA. The market crashed 20% here, all right? Threatening this portion, eventually still stay above, so no bear market. Went on to take a new high. The market came down, fought a little bit, and eventually gave way. When the market is fighting at 200 EMA and the market gives way, I use a term by the institution and funds. I call it permission to dump. Check this into your head. When at 200 EMA and below, you can witness dumping. You better join into sell. Yeah. Now the market will not go one straight line down. It will do a flush down. After that, typically it will try to form a base and it will do a retracement back to test the 200 EMA. I have no time to repeat. I hope you're capturing this. Yeah. Okay, I'll repeat for you. Below 200, if you see weakness, permission to dump, join into sell. After a flush down, very usual, the market will form some kind of base, right? And attempt to retrace to test the EMA. If over here, if you are good at price action, candlesticks or whatever, that tell you that there are some more selling, join in the selling, all right? This is how it led to the 2008 crash. Now, after this crash, it's the same as here with different fundamentals though. It will not keep on going down. It's continue to fluctuate and form a base. It forms a double bottom and it retraces to test this level. If it can resist it, it is still a bear market. But if it can go above, no more bear market. Don't tell me about economics. Don't tell me about people losing their job. I'm not interested. As a trader, if it can go back above, no more bear market. Are you following this? Now, if you want to benefit from my experience, you need to remember this SOP, yeah? All right, I have slowed down to go through this with you. Let's take a look at what happened. Back in March, just March, a few months ago, I was doing a webinar and I was showing my audience this. Can you see that? I look at all these 10 markets and these are already below 200, right? Thailand below 200, Singapore below 200, Malaysia below 200. We are very connected, Thailand, Malaysia, Singapore. We are very closely related. And the rest of the markets start to plunge below, including the US market, all right? So therefore, this is in March. Look at 23rd of February. When the weakness start to come in, right? I posted on my Facebook, where is the door? I explained and I asked the question again, where is the door? Now, door means what? D-O-L-R. It stands for the direction of least resistance, meaning that I'm in a different lingo. I'm trying to tell you the trend is down, yeah? When the trend is up, the direction of least resistance is up. That means market is very easy to break high, break high, break high. That is when the DOLR is up. But when the direction is down, right? The direction of least resistance is downside. The market is very easy to break low, break low, break low. So on the 28th of February, I have already identified that market generally has gone below the 200 EMA and the funds are having permission to dump. So I wanted to just let my students, our traders, know that focus on shorting. Okay, so the market dropped all the way down to form a low in late March. Remember, after a drop that is over, it will have to somehow form a base. I don't like V shape, yeah, but otherwise it will do a double bottom and it will start to do a retracement, right? Up back to test the 200 EMA. Now, this is in April. I was doing another webinar. The market came up. NASDAQ is the first one to go up and went above. The rest haven't reached yet. So during this particular webinar, I am telling people, yeah, market can possibly still go up, yeah. None of them has tested yet except NASDAQ. But once it go up to test this and show you resistance, you must sell. That is what I say in April. What happened from April until now? Did you see the 200 resisted the market? Well, it resisted Thailand. Thailand behaved very, very orderly. Yeah, Thailand. Those of you from Thailand, I hope you are doing well and understand this. Resisted and came up. Singapore is so weak, we did not even reach the 200. Although I'm still waiting for this to happen. Yeah, at least go and test. But the rest of the market, including Kuala Lumpur, they have all gone above. So therefore, I'm not saying this on high side. On the 4th of June, when the rest of the market are not resisted and start to resurface above the 200 EMA, what did I say? They have reached 200 EMA and did not get resisted. Bears have given way to mad cow. It's going to be a bull market. I even call it a mad cow, right? I post a picture that the bears have given way to the bulls. So you're not supposed to be bearish anymore. Don't go and look at, oh, second wave, third wave, people out of job. That is none of your business if you want to trade the market. You have to trade what you see about the market, right? This is the current situation. They are still bullish. Tech stocks, S&P are still attempting new high. Okay, so therefore, look at this. What is real? You must open up your eyes and look at what is real. Now, you want real? Look at Singapore. We are real. We are in a bear market and not able to even touch this yet. So we are in a bearish market. Okay, second point. Wow, I am really rushing. I don't have too much time left. All right, so anyway, let's go through price action according to Dow theory. Yeah. Now, this is called Dow theory. If you see a market doing higher high, higher low, this is called uptrend. Lower high, lower low, this is called a downtrend. And when you see this thing, it's called a sideways market. All right. So take a look at NASDAQ. NASDAQ, since the plunge, doing lower high, lower low, break below this. This is where you're supposed to dump. After which, NASDAQ formed a low. And can you see it is doing Dow theory, higher high, higher low, and went above 200 EMA. NASDAQ in mid-April is already gone above, yeah? And it continued to do higher high, higher low all the way until today. So don't tell me market is bad. Compared to Singapore. Singapore is below, yeah, we attempt to go up a little bit. After that, can you see what happened? We are doing lower, lower, lower. and we are in a way down until just this month, right? We start to do a higher high, higher low, okay, this month. So if you compare these two, can you see what happened? News, yeah, why I always call news not so important unless you are good at interpreting it. If you're good, I cannot fault you. I'm no good. But good news happen, it will cause bull or bear market, they will both react to good news. Bad news, bull or bear market, they'll both react to bad news, right? But what is the difference? They will react to good news by taking new high. They will react to bad news by doing retracement. Good news, they take new high again. Yeah. Bad market, good news, they only do retracement. Bad news, take new low. So that would be the difference between how a bull market behave and how a bear market behave. Okay. So therefore, I'm showing you this, yeah, to again tell you what is real and what is a bull and what is bear. You have to be very clear. All right, I will need to talk about this because it's all about mindset. Yeah. Now, I do not know who this seller is. One of the guru in the US, he said this: those traders with a futures background, like myself, when I'm a total newbie, I go into the floor, right? I am more sensitive to market action and price action. So if you are new and you listen to me and you start trading and you adopt my set of belief, you would belong to these first two lines. Whereas value-based equity traders, people who trade shares, yeah, for a long time, they are trained to react less to the market, and they'll focus a lot more on the assessment of the company or situation viability. So those people who say that, oh, the economy is bad, people losing job, companies toll or whatever, they belong to this group, and therefore they will not be good traders. I'm showing you this chart to show you about the difference in thinking and mindset that is important. Okay, so identify trend with news. Yeah, look at when good news come. If they can take high, they are bull market. Bad news, only retracement is bull market. When good news, only retracement, bad news, take low, then it becomes bear market. So I'm repeating this to help you understand how to identify news. Okay, so NASDAQ Singapore. All right, I have spent almost 1 hour. My time is almost up to trade index futures with technical analysis. Yeah, you understand what this is now. Now, my purpose of this whole monthly webinar, starting from today, is to give you enough knowledge so that you can start as soon as possible and trade SiMSCI. Okay, so why SiMSCI? Because it is decent size. The whole value is about 30,000. Yeah, not too big, not too small. There are decent movement and decent speed. Definitely suitable for beginners. Fundamentals close to heart. All the things that are happening, what happened to Temasek, what happened to SIA or whatever, that can affect this basket of stocks. You can get news very fast. Is a contract for the bears, right? Some people like to sell. If you like to sell, for heaven's sake, don't go and sell tech stock. Don't go and sell NASDAQ. Don't go and sell the China tech stock. You're going to die. Yeah. If you really need to sell contracts that are weak. SiMSCI is a good contract for you to express your bearish view. All right, learn to specialize. Yeah. Now you might want to pick one contract, one instrument, futures, SiMSCI, learn setup, learn everything about it so that you can handle up, down, sideways market, and you know everything about this market. Even when you close your eyes, you know the levels. Okay, so it's a product to hedge your SG shares portfolio. For those of you who are holding a lot of shares that you refuse to sell and you agonize over why Singapore cannot go up, why cannot. Now, I have some students who belong to this category. They want to benefit from some of the dividends, yeah, by the banks, and because their grandmother passed the shares to them, so they cannot sell. So when the market reaches a certain high level, they feel they cannot go up anymore. They don't want to sell their shares, but they use SiMSCI to sell. All right. So when the market actually come off, they will benefit from the down market from their SiMSCI futures. So they will compensate for the losses to the stock itself. Right. So for this reason, you can actually approach SiMSCI. But one most important reason, ladies and gentlemen, the current promotion. SiMSCI used to cost walk-in customer in Singapore, one buy, one sell is going to cost you $20. One router, $20. I will leave it to you to go and find out how cheap it is today. All right, I wouldn't tell you, but please go and find out. So for a trader, it's very important. The commission has been reduced so much that anything different become your profit. Okay, so current promotion likely last till end of the year. Is very attractive. So a lot of my students who actually trade different market, they stop trading SiMSCI, they're coming back to look at SiMSCI because of the good commission that Philip as well as SGX are offering now. Okay, so I'm going to, oh dear, I do not know if the organizer will stop me. I have a bit more things here that I might overrun a little bit. If you're not free, you can go, but if you can stay on with me for a little while more, I want to just share with you about the contract specs. You can, all right, you can go to the SGX website and go to the contract specs. I'm not going to go to all these, it's going to be very boring. So to find out a little bit more, and I want to actually show you with the chart, right? Okay, take a look, yeah. This is the SiMSCI chart. So you can see from this drop and this rise until here, it has got a value of 25,000 to this amount. Okay, now, so I already mentioned, after this drop, I'm actually looking at the market trading back towards the 200 EMA, which it failed to come. I'm still focusing a little bit on the potential to come, although this part is coming down, but we are doing a bit of down theory, higher low. Anyway, we have a very important support here that if I go down to a hourly chart, right? This is when you have this opportunity. When the market came off to this important green support, if you had been following something that is I'm doing as well, this would be have been the level you entered around 28,400 or $500. Yeah. So one big figure from 25 to 29 would have been $1,000 worth. So this is actually the amount of money that you can make. If you find that okay, market is weak, you want to sell, you can also do so. So currently, just to share with you, this is an important level, yeah, that I expect it not to break. If break, I'm going to cut loss. Then market came up and showed a higher low supported at this purple level. Now, so these are the immediate two levels based on what I've shared with you that I'm looking at. Intraday trading, which I talk about next session. All right. So this will be intraday movement. Okay, let me go back to my slides again. Sorry, yeah. Take a closer look at the contract specs, and this would be the picture I showed you just now. Important low over here that we found support, and then a higher support. So we are playing with this market here for intraday short-term play. All right. So how to start this journey? Now, let's recap some of the points. It's the pandemic that has changed the whole world that brought you to me. Something that I've experienced over the last 20 years going to electronic trading. So I'm teaching you how to trade the SiMSCI index futures using technical analysis. You need to understand the market behavior. You need to understand the instrument, all right? So be aware of the 3 M's, learning from professional community, remembering the golden rules, and you need to develop yourself a trader's mindset, yeah, a winner's mindset before you can achieve consistency, okay? Now, you might want to inform your broker's help. Approach Philip, yeah, whether you're from Thailand, Malaysia, Indonesia, or locally. Try to understand a bit more about futures if this session is not enough. Otherwise, come on board to my subsequent session where I will talk more. But meanwhile, you can ask your broker about more, get to know more about contract specs, especially expiry and margin. Understand what is margin call and things like that. If you put a stop loss, you would never meet the margin call. Right? However, do take note of margin call and expiry. SiMSCI expires on the second last business day of every month. So therefore, you might want to come approaching expiry, trade the 5-month contract. All right, don't get yourself caught with expiry. But anyway, getting caught also no big deal. In some of the subsequent sessions, I will try to address this issue a little bit more. Now, learn from the broker also how to execute a trade. Learn the user interface, learn the different order types, right? What is a limit order, what is market order, and how to left click, right click, yeah? Get this service from the broker. And also, I'm trading with technical analysis, which is chart. So Philip also provide you free charting software. Until you reach a later stage where you want some personalized chart, then you might need to do like me, I subscribe to chart. But right now, Philip's chart can be quite comprehensive and real time. So I try to start with as low cost as possible. So all these are the things that you can get from your broker. Approach Philip for it. So of course, ultimately, a professional trading requires to develop a good trading plan and to learn the setups. This is the part whereby you can learn from me if my course is available, right? So conclusion. Now, this is to show the different parties, yeah? And this is what I want you to remember. Whatever you listen to me or other people, are they talking about instrument or are they talking about making you understand the market behavior? You need both of these to make money, all right? Also, you can be remembering, is someone talking about something pertaining to a winner's trader's mindset or about method or about money management? You need all the 3 to integrate into a proper methodology to make money. So the 2 golden rules, don't forget, identify trend, if wrong card, no holy grail. It's a game of probability. Avoid the risk of ruin. Yeah. I also teach you how to identify trend by these two very simple but yet effective method. Okay. So don't trade on the basis of tip. Trade with a friend. Trade with the trend and not your friend. So in Chinese, 努力不一定成功哦，成功一定要努力。Yeah. So those who don't understand, now put in effort does not guarantee you success. But if you want success, you really need to put in effort. There's no such thing as I don't want effort and I'll make money. All right. So this is quite common sense. And I just saw this today. Yeah. Only those who dare to fail greatly can ever achieve greatly, right? Although you don't have to fail greatly, you just need to know how to be careful, put your stop loss. Then eventually, once you learn, you will be able to do well. All right, you can go to my website to read more about my philosophy and my sniper trader. She contributed to a lot of blogs, yeah, some of our beliefs, our indicators, and our program. And you can also write to me after the pandemic. My classroom course has stopped already. It's in the process of changing into online lesson. So it is going to be ready pretty soon. So if you're keen to find out about the training that I conduct, please write to me. All right, write to me so that when my course is ready, I can inform you online lesson. Do not write to me to ask about today's session, because I am very busy running our community. Yeah. So if you want to attend my next free session, this series of so-called SiMSCI with YCK, the next date is on the 1st of September, right? I will also talk about a similar thing, but in different way with additional things, so that to help you one step further to understand trading SiMSCI. Meanwhile, if you can open an account with your broker and start to experiment a little bit more, it will help you understand the next session much better. Okay, so you can do yourself a favor by doing that. All right. Sorry, organizer, I don't know how much time we have for Q&A. Whatever it is, do not ask me questions that is not related to today's topic. Yeah. So remember, my whole purpose is to help you get started with SiMSCI as soon as possible. Okay. So with that, organizer, please take over the Q&A portion.
All right. So hi, Tom. Hi, everyone. Due to the time constraint, we will not be doing the live Q&A session. All right. So
Okay,
everyone, if you have, it's all right. But if anyone have burning questions for Tom, please do send them in via the post-webinar survey that will appear when this session ends, and we will answer them via email. Yep, and we will also be sending everyone a link to today's webinar recording so you can watch it again if you would like to. Yeah, so thank you for sharing your insights with us, Tom, and thank you very much, everybody, for being such a great audience tonight. We have reached the end of this webinar. Have a good night and goodbye.
Bye-bye.